Hello and good afternoon, everyone. My name is Courtney Pollock, and I'm the Customer Marketing Coordinator for SWK Technologies. And I'd like to welcome you to our webinar, How to Use PO Landed Cost in Sage 100, presented by SWK's Bruce Kern. Before we get started, let's go over some housekeeping items. Everyone has been placed on mute to keep the background noise to a minimum. However, throughout the webinar, you can submit any questions you have. If you'd like to submit a question, look for the questions section in your GoToWebinar, and we will answer all your questions at the end of the presentation. We're also recording this presentation, and it will be distributed tomorrow to all attendees, as well as those who registered but were unable to attend. And finally, we appreciate your participation in our Q&A session and our closing survey. With that said, thank you for taking the time out of your busy day to attend this webinar, and I'm going to hand it over to Bruce on camera over there for the main event.
Thank you, Courtney, and welcome everybody. Here we go. Without any further ado, we're going to talk a little bit about what we're going to cover today, and then we'll jump into our live webinar. So, PO landed cost. We'll talk about what is PO landed cost and why is that important. You know, the idea here with the PO landed cost is that it takes other costs besides the cost of the item to get something landed at your facility. And so the idea here is how can we take some of those costs and actually allocate those and include them as part of the raw item cost so that we can facilitate the matching principle. And so we're going to talk about those things there, as well as some setups for the PO landed cost. And the ultimate goal here is to try to provide a better measure of the true profit by including these in-transit costs as part of the item cost so that they can flow out as part of the cost of goods sold when we sell the item or use it in manufacturing, etc. So we'll talk about the setups for landed cost, and of course we will do a live demo all the way from PO entry into the receipt of goods. And let's see here. All right, the first thing we're going to cover next is, if I can get the slide to move forward here, talking a little bit about the matching principle. So this is just a key concept in accounting, that we match the revenues with the costs in a given accounting period to have an accurate measure of the profit. So without allocating landed cost, essentially what we're doing is we're expensing some of these in-transit costs. It's hitting our bottom line immediately as soon as we book those expenses, instead of having those go against the revenue at a point in time, which could be much later, to have a better measure of the profit. So the matching principle is just a concept that we match those revenues and expenses together to accurately measure the profit. Okay, so then that cost in theory will flow through the system until the item is sold, used in manufacturing, or consumed internally. So the real problem with not allocating landed cost is just that we're taking a hit to our bottom line with no offsetting revenue to do that. And truly, we don't really have the full picture of what the full item cost is if we're really just capturing the raw item cost. Some of the key features of landed cost is, you know, it's all about flexibility. So with landed cost, we can have more than one type of cost identifier. So you can use that to distinguish between, say, vendor billed, freight, or third-party carriers, duty, brokerage, or other types of cost that you may have in your environment. And B, there's also flexibility with landed cost because each one of these types can have its own calculation method. So we'll see that once we get into the demo, but there's different choices for the methods, and we can mix and match those. So flexibility with that. Another thing that really makes the landed cost flexible is the fact that it's a true allocation. That means that it is independent of the actual invoice amounts that may be where these duties, brokerage, and freight may be charged. So it's a true allocation feature, giving us control and also providing the flexibility to not have to receive an invoice at the time of the goods. So because of that flexibility, that is the feature that we're going to show in our demo. And with that said, let's jump out of this PowerPoint and get started on our live demo. So the first thing we need to do is just to talk about, where are the options for landed costs? How do we turn those on, and what kind of setup might be involved? Our first stop here will be in purchase order entry. And we'll go to the setup and go to our PO options. And we're going to look at this number 5 line entry tab. So here is the option to allow the entry of the landed cost right in the upper left of tab number 5. So it's a simple checkbox is all you have to do to turn the feature on. Couldn't be any easier. Okay, so if I turn that off temporarily, I want to point out that there is another freight allocation feature here. However, this one is much more limited. It does require an invoice, only allows one calculation method, etc. So we're not gonna feature that in today's webinar, but I'll point it out that there is another feature there. In my years of consulting, I've never seen anyone actually use that one. And actually, I see a few people who know about the landed cost using it, but it's a much not known feature, which is why we're having it in our webinar today. Okay, so we're going to turn that on right there, and then there is a option here to include the allocated cost in the default unit cost. Now, I'm not going to turn that on because, at least in my scenario, and as is the case in most places, people usually have some kind of an agreement on what the price is with their vendor, and they don't usually want those allocations to default into the actual cost the next time. Okay, setup continued here. On the number 6 tab here, we have the print landed cost allocation detail on register. Highly recommend that you turn that on if you're going to use the landed cost. That is your way that you will be able to review the calculations and what happened at the receipt of goods as the system performs the math for you. So make sure you check that, otherwise you will not have as much visibility on your journals as you could have. All right, we're going to go ahead and accept that to save those. Also on the PO setup menu, third from the bottom, is the landed cost type maintenance. So we're going to open this guy up and talk about this for a minute. And the system comes with this one called FRGHT. It's supposed to represent freight, although you can change that description. So this is a default, comes with the system. Notice the delete button is grayed out. That is because it is a Sage 100 stock included piece of setting. So you're not supposed to delete this. You don't have to use it, but you're not supposed to delete it. That's why that's grayed out. So we'll talk about these fields here for a minute. The first thing that we have available to us with a landed cost type, in this case freight, is the ability to choose a allocation method. And as you can see, there's 4 choices there: weight, cost, volume, and quantity. So based on whatever those things are on a particular purchase order, it's going to do math for us based on that field. So if we're using weights, we have to have item weights. If we're using volume, we have to have the item volume in Sage. The next thing we need to do is determine what expense account we're going to use in the allocation. So to talk more about this, I'm going to open up another screen here for us. And that is actually an accounts payable. Now, not everybody has divisions in their Sage 100, but this demo data does. And it doesn't really matter, because even if you don't have divisions turned on, behind the scenes, you have this division 00. And one of the things that accounts payable division maintenance does is it controls what account gets posted to when there's freight on a purchase order. So if I can put these things side by side, there we go. Now we're getting it. This tells the system when I have freight on a purchase order, this is where the money goes. So that debits freight expense when that happens. It could also be done straight through AP, and it could be coded there, but most commonly it's going to go through the PO. Now, that is not an accident why I have this expense account mapped to be the same account over here. That is what's going to get the credit to freight expense when I do my receipt of goods with landed costs. That is the offset or the allocation part. And so it's no accident that I made those two the same. The automatic update here is something that's optional. You can turn that off or on, only on the FRGHT. You can't have that option for any other one, so that might impact what you decide to use this for. What the automatic update does is it means that if you have freight added to your purchase order, it will automatically populate the landed cost type FRGHT with whatever that freight value is, whether it's an estimate or whether it's known. Okay, so that is the first one here, and that is why you have to be very particular about what GL code you want to put here. All right, enough of that. Let's look at the next one. Let's see, I have a few different ones set up in here. So we're going to look at the duty. We're going to use duty as one of our examples today. So duty is just set up another landed cost type, called it duty, set the allocation method on this one to actual cost. And just for grins for today, I actually mapped it to a different GL code, mostly so that we could see we have control over that. But again, that needs to be very deliberate in real life. And then let's see here. So those are the two there. Let's see if we have any more in here we might want to just show you real quick. Here's one I did for UPS. So again, a way of flagging a third-party carrier versus freight on the PO. Okay, so that's pretty easy to set those up. And the next thing we need to do is get our inventory items ready to work with landed cost. So to talk about that, we'll go into an item screen. Okay, let's bring this over. Okay, we're going to pull up an item here. This happens to be a lotted item, and in order to use the landed cost, you have to have this checkbox on the item selected. It's a default, meaning if it's not checked, you can still make it do this on a purchase order, but it will do this automatically. So with this checkbox here, we're telling it that this item should default to using landed cost. And then it'll be a question of what information does it have to perform those calculations. So if you're going to turn that feature on, you may want to go through your items and update that field. Now, where that comes from there, that's actually a default. Here I am back on the main tab. If I click this blue hyperlink to the product line, it'll take me to this item's product line. And product lines do quite a few things in Sage. And one of the things that they do is they set the defaults for all these fields, one of which is the allocate landed cost down here in the lower left. So, you know, if you're going to start using that feature, or you're setting up your Sage with new product lines, etc., and you want to use that landed cost, that's a good field to have checked there. And that just controls whether this is a default or not. You can certainly turn it off or on an individual item as you need. Okay, another thing we should probably talk about with landed cost is the actual costing methods for inventory. So I mentioned it here a minute ago that this was a lot valued item. There are many different types of valuation, and they all behave a little different and or have their own kind of personality, for lack of a better term. So lot works really well with landed cost because lots capture the actual cost of a lot, and then it can perform those allocations for you. So we have very clear visibility of to what the actual lot cost was, as well as the allocations. If you're using, you know, LIFO, FIFO, those work well. Serial number works well with landed cost. What doesn't work as good with landed cost is standard cost. So let's pretend for a moment this is a standard cost item. So that means it would say standard here where it says lot. And when you use standard costing in accounting, it means that whatever this value is here for that standard cost at this unit of measure, that means that that is the cost of this item, regardless of what we actually had on our purchase order. And that is the cost that will come into Sage. So if the widget costs $1 and it's standard cost, it doesn't really work with landed cost because it's going to come in at $1 anyway, by definition of being standard cost. So standard cost is not your best valuation method to try to use with landed cost. The other one that's, it works, but it's maybe not the ideal scenario, is the average cost. So average cost is an average over all of time and all transactions in Sage. So you will still get the allocation, but because it's an average, you're still not really getting the true, current cost with an allocation. So it works, but it still kind of blurs the picture. It'll still do the allocation. Another thing kind of worth pointing out over here, and we'll come back to this in a little bit, is that if you'd use the landed cost, this box over here in the lower right of the #1 main tab on an item will capture and track what the last costs were using landed cost. So in this case, we can see that there was a raw item cost here, some kind of an allocation with a new cost. So we'll look to see if we can update that as part of our webinar today. Okay, lots of fun with costing. All right, let's get into the nitty gritties of this thing, and let's generate a PO here. All right. Purchase order entry. We'll get our next PO here. Pick a vendor, any vendor. Might as well pick the first vendor, make it easy. And we're gonna come on over here to our lines tab, and we're gonna go ahead and add a couple items. Okay, so there's our warehouse. This LC box here, I moved up from the secondary grid by dragging it up here for visibility, because in my case, I want to be able to see that on every item. So I've got my first item here. It's selected for landed cost. I could turn that on and off if I wanted to. If I can get my mouse to behave here. I had a Microsoft update recently, and my mouse has not been behaving ever since. Okay, so this one, I have the weight field here as well. That also came from the item master. And I have that in my primary grid as well, because weight is one of the things that we're going to use in our calculations. So want to point that out. And to keep the math simple today, we're just going to order 1, and note that the unit cost is 80. We're also going to use the unit cost in our landed cost allocation calculations today. So we'll go ahead and add another item. Now it might be obvious, but I'll say it anyway. Because we're allocating cost, if we only have one item, obviously all the cost is going to get allocated to it. The more common scenarios, there's more than one item, and we want to allocate those costs across the board. So that's why we're going to put at least 2 items in here for today. Notice that this item's weight is 20 compared to the first one being 10. We'll keep the same quantity, and this item also has a different cost. So total weight here is $30, total cost is $180. And we're going to come over here to our totals tab. And here's the place where you enter your freight. All of you know that, no doubt. Now, a lot of people do not enter freight on their purchase orders when they generate them. Some people don't do that until they receive the invoice. Other people put the freight on here as an estimate, or sometimes they might actually have a quoted freight amount. I'm just going to throw it on here nilly-willy and just say it's an estimate for now. Okay, so I've got my purchase order, it's all set to go, and magically time flies by and the goods have now arrived at our facility. So what we're going to do now is go and receive these goods. Okay, so receipt of goods entry. We'll get ourselves a batch number, and we'll get ourselves a receipt, and we'll pick our purchase order. Now, if you have the actual invoice at the receipt of goods, you can go ahead and enter it here. It works fine if you do have the invoice. It works fine if you don't have the invoice. That's part of the flexibility, that the landed cost doesn't have to be tied to the invoice, but it can be. So in this scenario, I'm going to say I don't have the invoice. That gets emailed to the accounting department, and they usually get it, the day after, or sometime different than the time I actually got these goods. All right, so but you can enter the invoice there if you need to. Skip right on over to the lines tab here where the action happens, and we're going to go ahead and receive our complete purchase order here. And notice that we have these triangles here that tells us we need to do something. I have a client who likes to call that the triangle of death. It's not really the triangle of death. It's just because these are lotted items and we need to provide the lot numbers. So if anybody isn't used to seeing that, that's all it is. And we're just going to use today's date as our lot number for convenience. Of course, you could have more than one lot. In this case, we only have one. And we'll go ahead and quickly update that on this other one. Okay, so now they're fully distributed. It's happy. The triangle of death symbol went away and the lot and serial grid indicator says that it's gold. That means it's happy. So we're going to come over here to the totals tab. Now here's our freight again. Note that we did not receive the invoice here. So there should be no charge for the freight when we update this. And at this point, if I want to change the freight here, I can leave it as $10. I can make it 0. I can do whatever I want to do with that. So it just depends on what you need to do. Now here's where the action happens. We're at the receipt of goods. There's now a button up here that says landed cost in the upper right. So if we click that button, then we will see that the FRGHT that had the automatic update is already added there with whatever we had for the freight at that point in time. Now we can override that to any other number, or we can leave that as $10 in this case is what we're going to do, but we can change that. We can also add any other landed cost types that we might choose to do here that we want. So if I pick duty, for example, and notice this is telling me my list. It's got my method, cost, quantity, weight, shows my, my GL code. So, and you can customize that lookup as well. And just to keep it simple for today, we're going to make those two match just to make the math really easy so we can conceptually see what it's doing. All right, so, and you can continue to add more of those. So point is here, we have $20 worth of landed cost, $10 in the freight without an invoice, and $180 worth of items weighing a total of 30 pounds or whatever that represents. Okay, and a reminder here that because this is an allocation feature, these don't have to be exact. These can be estimates. And that's kind of the idea with an allocation, is that it may not be exact. We're just allocating money based on something that we know or an estimate. So a lot of clients who use this feature have a little spreadsheet that they keep track of how their brokerage and or duty things get calculated, and they're able to come up with a pretty close estimate based on known values. So before we actually do the update here, I'm going to pull up our PowerPoint one more time and just show this slide to give you a little bit of a preview and talk through this for a minute before we actually see it. So item number 8971, you can see total weight is 30. That means that the first item here that weighs 10 is 33% of that weight. It's got $10 worth of freight to allocate. So it's going to get 333. The other item's going to get 667 for the FRGHT, for the $10 that's in our freight bucket. The duty is the other one. That one uses the cost method. Total cost is 180. The first item is 80 of the 180 or 44%. That's going to math out to about 444 for its allocation. The other item will get the other part of that. So if we add the 333 to the 443 here, the total allocation is going to be 777 to the first item. So if it cost $80, it should end up at 8777. All right, that's what we're after. That's the math it's going to be doing. So let's go ahead and update this thing. And of course, we're using demo data. It's dated 2025. All right, so let's blow this thing up here. And let me see if I can zoom this up at all. Yeah, that's a little bit better. So, I don't love the layout of the Sage journals and registers in every case, and that's why I made that slide earlier. But let's just talk through this real quick. You've got your receipt number. Here's your item. You received one at 80, so that's $80. There's that allocation for the freight for 333 that we talked about, and there's the 444, and there's the 8770 for that first item. Similar thing down here. This one ended up at 112. Gives us a summary at the end. Here's the total amount of duty that's been allocated. Here's the total amount of FRGHT or freight that's been allocated. And it's noting that we have $10 here. So now we actually did not receive an invoice for this one. So, we shouldn't see anything hitting accounts payable. Here it's prompting us for the back order fill report. Normally you would be printing that, I'm sure. We're going to say no in this case in the interest of time. And then we're going to go ahead and update our receipt register. And now we're going to look at our daily transaction register for you accounting types out there. And I know you're out there. We'll take a look at this and talk about the GL postings and why did we get what we have. All right, let's blow that up. Let's make this 200. Okay, so we did not receive an invoice, so there should be no accounts payable, and there isn't. We do have purchases clearing, which represents that liability that we will have when we do get the invoice, but we didn't receive the invoice, so that the value of the purchases clearing is just the value of the raw items that we received. So that's $180 for purchases clearing purposes. The inventory went up by $200, however, because we allocated $20, 10 for freight and 10 for duty. Notice that this does tell us here in the journal posting, it does refer to the landed cost type along with the receipt of goods journal number, so we can identify the transaction where that came from. And here's, we'll talk about this last line here. This is our freight expense. Notice that it credited our freight expense. So this is the allocation aspect. So when we receive a freight invoice, we're debiting freight expense. In this case, we're crediting freight expense. That's the allocation or the offset that we're after to keep that expense off our books in the current period. All right, so that's the correct posting. And of course, we will go ahead and update that. Now, let's go take a look after the fact. So we'll come back here to that first item that we were looking at. And we'll just take a look here and note that it's saying that our last cost was $80. That's true. It's now updated the allocation value, and it's now telling us here's the new value. Now, Sage does keep these fields open if you have the security permissions. So you could type over that if you didn't like that, but that's where those came from, and it does write to those fields. And you can also overwrite that if you don't like it, but that's what it is. All right, so let's go over here to our cost detail next. All right, so here is that lot number that we just entered that had the date on it for today. There's our receipt of goods ID. There's that unit cost showing 8770, and it breaks this down for us right on the screen here. We can also see the allocated cost as well as that raw item cost and the full item cost right there. So pretty good visibility to seeing what's going on at the item level as well after the fact. Okay, next thing we'll take a look at is the inventory trial balance. So for those of you who don't know this, the word trial balance in Sage is meaningful. It means that's the report you should be using to reconcile to your general ledger. So that applies in any module, whether that's AR, AP, or inventory. If it says trial balance, it means that report is reflective of what should be hitting your general ledger, and therefore you should be using that to reconcile. This one here has some settings in it that I saved already, specifically for our example. So we don't have to worry about looking at all 10,000 items in the inventory. We can look at just the two that we're playing around with today. So really we'll focus on this first one. And I did some manipulation before the webinar to make sure that the warehouse 000 didn't have anything in it. So this is the one that we just received. And as you can see, it ended up at 8777. So because we saw that's what hit our GL, that should work out pretty good for reconciliation purposes. All right, the next thing we are going to take a look at is a little bit more on the accounting side. And we said at the beginning that, you know, the landed cost, it's an allocation feature. And that means that when you do allocations of any type, you have to assess their reasonableness for the objective of the allocation in the first place over a period of time. What does that mean, really? So we'll pull up our GL here. You might remember this GL code from the beginning. This is our freight expense. So if I come over here to my transactions tab, maybe I can rescale that so it doesn't look so ugly. There we go, that's not too bad. It means that when I'm analyzing, and I wish I could make that a little bigger because I know that's small. When we're analyzing how we're doing with our allocations, we need to review the accounts that are involved to see if we're accomplishing the goal or not, or if we're doing too much or not enough. So in this case, here's my freight expense. If my goal was to perfectly or try to offset so there was no freight expense related to purchasing hitting my bottom line, meaning I was allocating it all to the cost of the inventory, then I would need to come back in here periodically and review how am I doing. So here you can see the FRGHT doing the credits, reducing that, and you can also see you know, freight expense coming in. You might see AP activity in here or other, you know, freight expense coming in through the POs. But in this case, I can see that my ending balance is 4538. That means even though I'm doing these allocations at this point in time, I still have $4,500 worth of expense hitting my bottom line. So that's either accomplishing my goal or it isn't. And if it isn't, I might need to increase my allocations to try to get that closer to zero. Or you know, also have to be aware of the fact that you could be over allocating or under allocating. So if I over allocate, it means I'm actually booking more into my inventory than the actual freight expense that I actually have booked in my freight expense account. And I would see negative expense if that was the case. So that is why you need to assess the reasonableness over a period of time. Okay. One more thing we're going to try to squeeze in here is to do an invoice real quick. Get ourselves a batch. And we're just doing a one-step invoice. I know many of you probably either do a one or two-step invoice or even a shipping type invoice. So we'll just pick the first customer and we'll come over here to our lines tab and guess what we're going to sell them. We're going to go ahead and sell them one of those, and notice that you know, price doesn't really come into this. But if I pick the lot number here that we've, hold on, that's not our lot. Let's go fix that. I believe we were in warehouse 000. That might be my problem. Now we'll put this in here and we'll see if we can get the right lot in here now. And it matters because this is costing, right? So we have to have the right lot for the right cost. And it brought it in, and it does show our cost being $87.77, which includes the raw item cost plus what we allocated to it. So we're going to go ahead and update that right now. And we don't want that. We're just going to run the straight update here. You guys didn't come to see form printing. Okay, let's take a preview here. So nothing too flashy here. Doesn't show us anything too meaningful other than the normal stuff related to the cost. It's warning us the invoices haven't been printed. That's okay. And this is what we're really after, is this gross profit journal. So this is an optional journal that you can include with your sales order journal updates, in case you didn't know that. I think it's an outstanding journal for visibility in terms of profitability. So here it is. It's got our cost of goods sold there. And now we're getting that true measure of the gross profit with the true profit margin, or something at least a lot closer than it would be having factored in those transportation costs to get that in this case, was freight and duty. So fantastic. We now have matched our costs with our revenue. And we'll go ahead and update that. And we'll take a last look at this posting for the accounting types in the group. And so that's our revenue. There's that inventory coming out for 8777, represented by the cost of goods sold, and then of course our sales. Okay, so definitely that cost followed it all the way through from the receiving all the way into the inventory, and it would do the same thing if you used it in manufacturing. That would have just been the cost that went into your work in process essentially when that item was brought in to a parent item. And with that, we're going to turn it open to questions and answers. That is how the landed cost feature works, everybody. Is there any questions out there?
Awesome. Thank you, Bruce. I think we do have a couple questions out there in the audience. So if you've already submitted a question, we'll get to those in just a second. And if you have a question, please put it in the question section or in the chat box, and I will ask Bruce for you so he can get that answered. And while we're letting some people get their questions in, Bruce, I'm gonna go ahead and ask you our first question. So will PO landed cost work with item unit of measure conversion?
The answer is yes. And let me just pull this up because not everybody is actually as familiar with this as you might think. But we'll pull up our item again and talk about that. So there's two layers of units of measure conversion for items in Sage. The base one is here, what you see on an item. So what they're saying is if this item was really purchased in a case, and I'll say it's a case of 24, let's say, that would tell me that there's 24 eaches in that case. And so Sage does math based on these conversions and the values that we put here based on the standard. So that question is really asking, you know, hey, if these units are different units, is Sage smart enough to deal with that? And the answer is yes, it does work with the unit to measure the math, does work correctly.
Okay, great. We've got other questions here. So is there a limit to the number of landed cost types you can create?
All right, let's see here. Let's go take a look. So here is under the PO setup, landed cost type maintenance. This is where the landed costs are set up. So here's our list. I believe it's a 5-character code, but there is no limit to the number of codes you can use. I'm sure there is some kind of a database end of record limit, but it's probably like 9,999 codes. So there's no known limit. I've never seen a client hit a limit. So there probably is a limit at some point, but there's no known limit that we've ever seen hit. So you should be able to add as many as you need.
Okay. Yeah, I think that'd be hard to, you know, hit that amount. Our next question is, what if a freight carrier invoice is separate from the material invoice and it comes in much later?
That's still okay because, and that's a great question. That gets right to the heart of the matter. So if you get a freight carrier invoice, it means it's not the vendor you bought the item from. It's coming from like UPS. So over here, I'm just using UPS as an example because I have it set up. Oh, I guess I have FedEx in here too. Can't pick on the freight carrier too much. So in this case, you know, some people actually just set up one. Some people just use FRGHT to represent third-party carrier freight. Other people like to split it up. I like to split it up. So if I'm going to have a third-party carrier like UPS in this example, I would set up a cost type for that. And I would simply use that in my landed cost functionality as per what we just showed. Then when that UPS invoice comes, and you're entering that in accounts payable in your invoice data entry in here, getting that, that invoice into pay UPS, what that's going to do, and in theory, and we talked a little bit, let's try to see if we can, close the loop here. But we talked about how if it goes through the PO, it uses this freight account. So in theory, whatever account you're coding your UPS in this example, your third-party freight carrier to, that would be the account that you'd want to use in your offset. So if you're coding your freight expense to 770 through accounts payable, and I'm just showing it here because that's what the PO uses. If you go through AP, you're just coding it to that freight expense directly on the lines tab when you're entering the invoice. Whatever GL code you use, that's the one that you should be using in your offset. Good question.
Okay,
but
great.
Okay, go ahead. Yes.
Oh no, I mean, if Bruce, if you have more to add, we got questions on questions coming in, so keep going.
Keep going. I think I got to the more or less the end of the answer there.
Great. Our next question will be, how does this work if there are multiple receipts on the same PO?
You can keep doing the landed cost on multiple receipts. Those calculations are by receipt. So if you're receiving a partial shipment, let's say, then you just need to have your allocation amounts and your landed cost scaled to what was received. So example, if I ordered 10 of something and I only got 5, and the whole amount to allocate would be $10, well, I need to trim that allocation back to $5 maybe, because I'm only getting half of what I expected. So I'm expecting half of the full landed cost for the for the whole order. So you can do multiple receipts. It does the allocation at the time you do the receipt. So you just have to be careful when you're doing that you review what is actually there and make it relevant to the quantity that you are receiving.
Okay, great. Our next question out there in the audience is, can freight costs be allocated at time of PO invoicing instead of at the receipt of goods?
No.
I like that answer. Simple, dry. No, it cannot. That leaves us.
I do have an addendum to that answer. You can, however, enter the invoice at the receipt of goods. So there's in purchase order, and just to make sure we don't make assumptions about what everybody in the audience knows. So what we did is we did the receipt of goods process without an invoice, but we could have, and there's also a separate receipt of invoice, these two tasks right here that I'm showing. However, we could have received the invoice with the goods, which some people do. And if we did, it would perform the allocation at that point, but it is a receipt of goods feature, not a receipt of invoice feature.
Okay. That leads us to our next question. Can you add HTC codes to items and automatically assign the duty percentage?
No. HTC codes, for those of you who don't know, I believe is for harmonized tariff codes. And so let's talk around that. Let's pull an item up here. So you can store an HTS code for items. The question of how is, it depends on what you want to do and what fields you're currently using. There's multiple different options. You could use one of these category codes. Instead of naming it color, it could be HTS code. And so you can associate HTS codes with items. And those things can flow into things like orders, purchase orders, for example. But there's no real link between the rate and the code, etc. So other than the settings in the actual landed cost, there's no way to default that. That doesn't mean it couldn't be done with some kind of custom programming, but truly the landed cost and I'll pull up the default one, The only actual default here of anything is the one that says FRGHT that has this automatic update checkbox. And I don't know why Sage in their wisdom did not include that as available for any of the other ones and only their one stock one, but you know, don't kill the messenger, I didn't design it. But this one will automatically populate the FRGHT with whatever's in the freight, but that's the only automatic anything in landed cost, other than defaulting the items to be selected for the calculations.
Okay, these are great questions, everyone in the audience. Thank you for, this is great participation. And that's going to lead us right into our next question, which is actually about manual entry. So, Bruce, is there any way to allocate freight across multiple POs without doing it manually?
No, the allocation features are PO specific. Good question.
Okay. And another question about, invoicing versus receipt of goods. So can any of this work with actual cost after the fact? It looks like this is a demo based on estimates. Could this be done at the receipt of invoice versus the receipt of goods?
No, you cannot do this at the receipt of invoice. It is a receipt of goods only feature. If you have the invoice at the receipt of goods, you can certainly put in the actual, values that you want for the landed cost. They can be actual at that point if you have the actual numbers. If not, they are only estimates. And that just depends on what you know or don't know.
Great. And I think this might be our last question. If you're out there and you have another question, go ahead and enter it in now. Can you assign different GL codes for landed cost expense to specific items?
No, but you can still kind of control it. So let's talk about that for a minute. So let's just say, and we'll just pull up this one here. So the thing that controls the GL posting for landed cost is the GL mapping in any one particular landed cost type. So, I could have, 3 different versions of freight, different, cost type name, but they could really represent the same thing. And all I'd have to do is change the GL codes here and then choose which one I wanted based on the GL code. But in this one, and let's see, I think I have a lookup here that talks about this. Yeah, here we go. So here in this list, I have 4 different ones, and 3 of them have the same GL code, but I did do an example where one was different. So it's the actual landed cost type that controls what GL code gets used in that allocation. So in this case, I had them kind of be separate names for separate things. But another way you could set this up is freight 1, it has one GL code. Freight 2 has a different GL code, to provide that flexibility for you to help control where the dollars go. So it's not at the item level, it's at the landed cost type level.
Okay, thank you, Bruce. And I've got another final question for you. We can keep this going if there's more questions out there. It looks like this user has one of our add-on products with ScanCo. So they want to know, will this work with ScanCo? How might that integration function with this? It
should work fine. They're probably talking about ScanCo multi-bin. They have many products, but that's probably the biggest one in their warehouse automation. We have clients that have been using multiple different multi-bin vendors and scanning vendors that use this landed cost feature. Works fine. Now, the only asterisk here is anytime you talk about a third-party add-on, there's always a chance that something in their code doesn't play nice with something in the Sage code. But I can tell you from literally very recent experience as of like last week, a client who's been using the landed cost feature with both ScanCo and ScanForce, both with no problems.
Okay, yeah, and if that's something, if that was not your portion of ScanCo that you're using, if you're using another one of their variations of products, always reach out to your rep. They can connect you with Bruce, and we can figure out how to make it work best for you. And I think, Bruce, that was our final question. Unless we got any last minute submissions. So I just want to say thank you, Bruce, one of our rock stars here at SWK, for showing us this, very underutilized and unknown portion of Sage 100. And thank you to everyone in the audience for joining us today and taking time out of your busy day. So I hope everyone has a great rest of their afternoon or morning, if you're located on the West Coast.
Thanks, everyone.